Money doesn't just move. It doesn't just change. It flips the entire playing field. When interest rates drop, it's like gravity loosening its grip on the economy. What once felt heavy suddenly feels light. What once felt impossible suddenly becomes possible. But here's the twist: most people never notice. To the average person, an interest rate cut is just another number in the news. A headline on CNBC, a percentage point shaved off their mortgage, maybe a little less pain on their credit card bill. It feels distant, abstract, almost irrelevant to their day-to-day lives. But to the wealthy, interest rate cuts are not background noise. They are signals. Signals that whisper, borrow now, expand now, scale now. And that single difference in perspective explains why interest rate cuts so often widen the wealth gap. See, the rich don't sit around waiting for someone to announce, hey, rates are lower now, go take advantage of it. They prepare in silence. They strengthen their credit, stack their cash reserves, and line up opportunities so that when the window opens, they're already sprinting while everyone else is still tying their shoes. Think of it like a race. The starting gun fires. One runner has been training for months, shoes laced, muscles ready, lungs strong. The other is scrambling, distracted, unprepared. Who wins? The prepared. Every single time. That's the hidden truth about money. By the time the crowd reacts, the wealthy are already moving. Deals are closed, loans are secured, and assets are compounding long before most people even realize the shift has begun. So why do interest rates matter so much? Let's zoom out. When rates are high, money is expensive. Loans bite into profits. Mortgages crush budgets. Businesses hesitate to expand. Families hold back on big purchases. It's like running uphill with a backpack full of bricks. Every step feels harder, slower, heavier. But when rates drop, the weight disappears. Suddenly the hill tilts downward. The same amount of effort now carries you twice as far. Businesses breathe easier. Markets rally with fresh energy. And investors who were frozen in place come alive again. Here's the catch. By the time the average person starts to feel this relief, by the time they notice a few dollars shaved off a car payment or a slightly smaller credit card bill, the wealthy are already halfway down the track building momentum. And this is where the silent gap widens. One group celebrates short-term relief. The other locks in long-term wealth. Picture two farmers. One plants seeds before the rain, anticipating the storm. The other waits until the rain is already pouring. Both will see growth, but only one will enjoy a harvest that multiplies. That's how the wealthy approach interest rate cuts. They aren't guessing, they aren't reacting. They're planting in silence, waiting for the signal, and then harvesting when the timing is perfect. And here's the good news. You don't need to be a billionaire to copy this playbook. The same strategies that hedge funds and real estate tycoons use can be scaled to your level. Because when rates fall, the opportunities aren't reserved for Wall Street. They exist in your personal finances too, in your debts, your credit, your savings, your investments. But here's the key. You need to be ready before the moment arrives. Wealth isn't built during the storm. It's built in the calm before it, in the silent months of preparation when nobody else is paying attention. So the real question isn't, what happens when rates drop? The real question is, when they do, will you be ready to act? Now let's talk about what exactly do the wealthy do before interest rates drop? And more importantly, how can you copy their playbook on your own scale? It comes down to 3 levels: offense, defense, and efficiency. 1. Offense, playing to win. When money becomes cheaper, expansion becomes easier. For the wealthy, this means launching new ventures, buying companies, and scaling investments with borrowed capital that now costs less. For you, it might look different. But the principle is the same. It could mean doubling down on your skills while financing is cheaper. It could mean starting a side business with a small loan that no longer eats into your profits. Or even renegotiating your salary when companies are more confident in hiring and expanding. Think of offense like opening a faucet. The wider you open it during these windows, the faster your wealth tank fills. The mistake average people make? They stay in survival mode when they should be leaning into growth. Second, defense. Protecting the foundation. Offense is about attacking opportunities. Defense is about removing the friction that slows you down. When rates fall, the first and easiest move is refinancing debt. A car loan at 7% could drop to 4%. A mortgage at 6% could slide to 3%. Even a credit card at 20% might dip into the teens. Each percentage point saved isn't just relief, It's momentum you can redirect into savings, investments, or debt payoff. But here's the catch most people miss. They celebrate the lower payment and then spend the difference. The wealthy don't make that mistake. They redirect every dollar saved into strengthening their system. For you, this might mean refinancing your student loans, consolidating high-interest debt when rates ease, or shifting monthly savings into an investment account instead of letting lifestyle creep eat it up. Defense isn't about spending less. It's about protecting gains and recycling savings into growth. 3. Efficiency, making every dollar work. This is where the acceleration happens. When money is cheaper, risk assets, stocks, crypto, real estate often surge. But the wealthy don't throw darts. They build systems. They automate. They compound. For you, efficiency could mean moving your emergency fund into a high-yield savings account, automating transfers into index funds the moment your paycheck hits, using lower-rate financing to invest in assets that grow faster than the interest you owe. Efficiency ensures that when rates drop, your money doesn't sit idle. It works harder, faster, and multiplies without you lifting a finger. Now imagine pulling all 3 levers at once. Offense, you're expanding into new skills or ventures at lower costs. Defense, you've locked in cheaper loans and redirected the savings. Efficiency, every dollar is automated, invested, and compounding. That's not just survival, that's acceleration. That's how the wealthy turn interest rate cuts into decades of compounding advantage. At first, preparation feels boring. You're paying down debt while friends buy new cars. You're stacking cash while others are spending on trips. You're polishing your credit score while no one else seems to care. But then the shift comes. The Fed announces a cut, rates slide down, and suddenly the math flips in your favor. You don't need millions to play this game. You just need the mindset to prepare in silence. So when the signal comes, you don't hesitate. You move, because the window won't stay open forever. And the wealth will always flow to those who are ready, not to those who wait. If this video helped you see the game differently, hit that like button, subscribe, and share this with someone who needs to hear it.